It's not usually very fun to watch the stock market go sideways or go down. We have money in it and we want to see it go up. However, if we're looking at the optimistic side of things, we have opportunities to buy some stocks at a discount. Well, maybe not a discount, but certainly not at all-time highs. Today I'm going to be looking at 3 tech stocks specifically that are good companies, solid. I would be shocked if they didn't return to all-time highs. Of course, I'm not saying I'm timing the exact bottom on these. These are all good, solid companies that you should do well in long term. So first one is Amazon. Amazon is a very unique company. They're very diversified. All of you know Amazon. So what I'm really focused on as an investor personally in Amazon, it's the Amazon Web Service side of things. The retail stuff is okay. It's fine. It's diversification, I guess. But it's all right. But they have some subscription stuff with Kindle and with, is it Amazon Prime? I don't do much streaming services, believe it or not. But yeah, Amazon Prime. But specifically the cloud stuff, the Amazon Web Services, very high profit margin, and it's growing rather fast. So even though the business, obviously they're doing well, 5 years, 109%. Maybe it doesn't look crazy good, but they are growing earnings per share probably faster because the fastest growing part of their business is the one with the highest margin, the Amazon Web Service. They're focusing on, and you see this trend across most of the Mag 7, certainly with Meta and Microsoft, they're focusing on the higher profit margin side of the business. A lot of that is cloud and data center. That's why there's so much investment. That's why you see companies, I mean, Palo Alto, you can name, I could probably rattle off 10 names right now off the top of my head of companies that are just benefiting from this data center boom. And there's good reason because they make a lot of money. The profit margins in these are very good. Amazon is off of all-time highs, 242. They're just at 200 right now, just under 200. So that's like a 20% off of all-time highs. I mean, is it possible Amazon never returns to all-time highs? Absolutely. Is it likely? No, it's not likely at all. The odds that Amazon doesn't hit an all-time high ever again, very unlikely. Things would have to go very catastrophically wrong in a company that, if you zoom out, has proven time and time again to be successful. Those who watch my channel consistently probably had a pretty good idea I was going to have a semiconductor stock in this video. That's because I absolutely love the semiconductor industry. I just do, and there's no more company more important than ASML. Yeah, you may argue NVIDIA, but I'm talking a little bit downstream. If we those who make more of the building blocks of things, ASML. If you do not know what they do, it's really complicated what they do. I wish I could give you a 5-second thing. Basically, they make some of the most complicated machines known to man. Search ASML machine and go to Google Images. Your mind will be blown. They're basically hundreds of millions of dollars a piece. They have like thousands of patents. No one can do what they do virtually. That's the interesting thing about the semiconductor market. There's 3 companies that basically have a total monopoly on the market right now for AI GPUs. It goes NVIDIA, and then downstream from that is TSM, and downstream from that is ASML. All 3 of those companies are integral in the supply chain of AI GPUs, and all of them virtually have a monopoly. And it's not because they do monopolistic practices. It's because no one can copy their tech. They just can't do it, or if they do it, in TSM's case, they can't do it and be profitable at the same time. I like TSM a lot too, also a decent opportunity, but ASML here, their PE ratio is also 35, almost exactly what Amazon's is, but they're substantially off of all-time highs, even from the last, they hit the highs in the last 52 weeks, so that's why it shows up here, 1,110. Now, its PE ratio was substantially higher. It was in the 50s at the time, and you may say that is extreme. I would agree with you. I don't generally like to buy stocks with that PE ratio. However, ASML is one of the most important companies in the entire world, and they have such they're just so good. When you have a company that has such a strong barrier to entry, such a strong moat in such an important field, you can pay higher PE premiums. But you're getting this, like I said, at a significant discount. Even if you just bounce back to that 1,000 range, you're already looking at a substantial upside. And honestly, you might have some time to get in this, but once people start getting excited about ASML again, there's really no predicting where it could go. You can see it pop up to 1,500 fairly easily. I would be shocked, absolutely shocked, if this company never reached all-time highs again. That would mean probably bad things for the semiconductor industry and the tech field in general, or some miracle success story of someone else in this. It would just be shocking. So I really like ASML. I like it at these prices. I've bought a lot at these prices. The reason I'm not buying at these prices is because I currently own enough. I'm kind of misspeaking here, but ASML is a great company, and it's a really good price in my opinion. The last stock we're covering today in this video is Arista Networks. I wish I could get a little bit more diversification, like get all these different tech, but honestly, it seems like 80 to 90% of tech is comprised into two fields. They're either semiconductor related or data center related, and Arista Networks is the former. They do a lot of networking solutions, software stuff for data centers. Data centers, AI data centers, cloud data, that sort of stuff. So very, very important stuff. They're a large company. They've grown a considerable amount over the last 5 years, but they still are down substantially. One thing that this does indicate to me is when people panic, this is one of the ones they panic and sell. So yeah, if you were to have a substantial market downturn, you would probably see this continue to go down like most stocks would, but this one probably more than others is what I'm trying to say. However, it's already shaking quite a lot out. I mean, we hit highs in 133. We're at 83 right now. So there is a lot of upside just if these hit all-time highs. And that's kind of what I'm trying to portray in this video today. If all these stocks just re-hit their all-time high, they don't even have to go higher. You're still going to be up 20, 25, 30% on all of these. But I think these are all stocks that are good, have proven long-term that they can grow. They're all profitable. Ironically, they're all, at least if the P is accurate, of course, sometimes you have distortions there. They're all within like 2.5 P points of each other. So that's kind of interesting. I did not do that on purpose, but I think all of these are good. And that's probably part of the reason they fell substantially is they were higher PE in general. When people are freaking out about the stock market, they sell some of these first. So like I said, these might not be the complete bottom. If we really do have a super poor stock market going forward, if you're really worried about it, yeah, to avoid these, you could probably time it a bit lower. But that's not always the game we play. Sometimes things are better than we think, whatever it may be. And getting into good companies at great prices or great companies at good prices is always a good thing. I don't know, the Warren Buffett quote's some in there somewhere, but I like Arista Networks. I think I'll talk about them a little bit more. Like I said, data center stuff, super, super, super important. They're just going to continue to grow. The margins are there for everyone. That's why it's growing so fast. They're large, $100 billion market cap, but not large enough where it's like, okay, can this continue to grow? And what we've seen from some of the larger companies, it seems like they can continue to grow and grow and grow and grow. So there's plenty of room for this company to continue to do well. And software side of things generally has higher profit margins as well. I think they're a good position. They're positioned well, and good company. Clearly, you can just keep zooming out on all these, and it's just more and more and more impressive. So anyways, that's all I really got for this video, guys. If you enjoyed, I'd appreciate if you like and subscribe. I covered all these stocks fairly recently in a more detailed video. You could probably search it on my channel, something like that. But I appreciate all of you for watching. I'll catch you next time.